Hey guys, Shelby Mathis here, and today we're going to go over whether you should use a credit card or a debit card, the 5 main differences. So let's jump right on in. Now, I've seen videos on this, and the reason I'm doing it is because I get a lot of questions about it. So I just want to dive into it. This will be a one and done type of video because it's not going to change. And we're going to break down the reasons pro and con as to why you would use a credit card versus a debit card. So first off, I'm one of those guys that's not a big fan of debt. And so the first thing like Dave Ramsey or somebody's going to say is don't tempt yourself. Don't use a credit card. Why would you use a credit card? Because you're not going to pay it off. Because statistically speaking, most people don't pay off their credit cards. Like you get those free, hey, 12 months, no interest. About 80% of the time, you screw it up and you end up paying the interest anyway. So I'm going to throw all that out the window and say this is assuming you have the cash sitting in your account and you're just going to pay off the credit card the same day, next day, within 30 days. And we're really just doing this the same as cash. Now, if you don't have the money, then obviously that credit card's going to be the only way you're going to go versus a debit card where it takes the cash out immediately. But what I'm going to do is focus on 5 differences that really put the credit card, believe it or not, far ahead of that debit card. And let's go to number one. Number one, and this is misunderstood by so many people, but I've seen clients impacted by this, and I've been impacted by it. Fraud protection. The biggest difference between a credit card and a debit card, when there's fraud involved, is that in a credit card, you haven't lost the money. It's the credit card has lost the money. On a debit card, you've lost the money. And now you're going to the bank. There's 2 completely different systems. And let me go over what they are. So number 1, debit cards are covered by something called the Electronic Fund Transfers Act. And what that does is it opens up and allows you to dispute a transaction within 60 days. And if you have lost money, then like, for example, you have a lost or stolen credit card and you report it within 60 days, then you have 0 liability. They'll give you back your money. If you wait a day, and by the way, I'll articulate it this way. Before the unauthorized transaction. So imagine this. Somebody steals my card and I report it immediately. I have 0 liability. Somebody steals my card and I see 2 days later, 3 days later, 4 days later, a bunch of unauthorized activity. Now I have a different set of rules. If I let them know within 2 days of an unauthorized transaction, I'm going to look at a $50 limit. That's it. So I got to report it within a couple of days and I have transactions. I'm going to have a $50 limit to my exposure. Then if I do it within 60 days, so between 2 and 60 days, I now have a $500 limit to the liability. And if I don't report it, like somebody steals my card and I don't realize it, I don't catch it because I'm not looking at my statements, and then I see like 3 months later, oh shoot, I don't remember making those transactions, I'm out of luck. You go beyond 60 days, you get no benefit. There is no protection. Now, under credit cards, you have something called the Fair Credit Billing Act. And there, it's just period. If I report it stolen before unauthorized transactions, I have 0 liability. Otherwise, I have $50 of liability. So your maximum amount of liability for fraudulent activity is $50. So it really comes back to 2 things. There's exposure under the debit card that you don't have on the credit card. And number 2, the debit card, they've taken your money. It's left to your account. On a credit card, it's left the credit card company's account, not mine. I'm just going to say I'm not going to pay that, right? Hey, that's not my charge. I'm not going to pay it, and they take it away. In a debit card, it's left my checking account, savings account, whatever it is. It's gone. And now I'm trying to get the bank to give it back to me, in which they're going to be required to do under those situations I just laid out above, as to when you notify them, how quickly you notify them, whether it's pre or after an authorized transaction. Huge difference. And I know there's people out there that are like, hey, there's no, hey, the credit card, you could dispute transactions, all that fun stuff. And they make it like the debit card, you can't. No, you can on a debit card. It's just the rules are a little more stringent, and you do risk losing some more of the money, especially. So you report it within 60 days. After, like, you catch something a month later, your exposure, you have exposure, it's $500. All right. Next difference, number 2. Credit building. If you are going to use credit at all for things like mortgages, for trying to qualify for things like insurance, for, hey, I need to be, I'm applying for a lease. If somebody's going to pull your credit, even employers, you need to have some sort of credit. Credit cards do help you build your credit up. Now, it's a two-edged sword. If you have a credit card that never has a balance, it may not help you. If you have a credit card with 10% balance that you're kind of carrying all the time, probably going to boost your score up really high. I think it's up to about 30%. It varies. There's tons of different formulas, and there's experts out there that claim to know this stuff. I just know from my experience that if you have a couple credit cards that are reporting to your credit and you use them sparingly, and you keep a small balance on it, it's going to benefit you from a credit building standpoint. And that could save you money on major purchases like a mortgage. The difference between having a 680 and a 740 could be thousands of dollars a month on a mortgage, depending on how big a loan you're getting. So taking care of that credit does become something. Nowadays, there's Credit Karma, or a lot of banks have these things where I think Capital One has CreditWise. Like, you can watch your credit and you can get an idea of where you're at. So you can make sure that your credit is as good as it possibly can be, especially for folks that are investors. And even if you're using business credit, they still look at your credit quite often to determine whether or not they're going to loan, even on a business credit card, for example. It might not report to your FICO, but they're still using your credit score, your FICO, as a basis as to whether they give it to you. So there is a huge difference when it comes to a debit card, which you're not going to get any benefit out of from a credit building standpoint, versus a credit card where it's going to help you build up. In fact, it's a huge reason for the higher score is having that type of credit, that revolving credit that gets paid off. It shows you're responsible and they like it. So it can have a major impact on you just on that alone. So even if you're just using it to buy and pay off, it could still have a big positive impact. Number 3, the third reason, this is the one everybody loves, rewards. So I get points on the credit card. I don't get points on my debit card. If you want to, what are rewards really worth? It's about 2%. So if I spend $5,000 a month, maybe it's $100. That $100, I could use it as gift cards. I could use it. Now, here's the rule. Generally speaking, rewards are not taxable. So the IRS has taken the position that it's a rebate when you buy things. If you use your credit card to buy things like Visa, prepaid cards, and gift cards, then the IRS has taken the position that the points you earn on those are taxable. It's not a rebate. When it's goods and services, it's a rebate. When it's not goods and services, it's cash, and they'll tax you on it. Now, are you ever going to get called out on it? I don't know. But if you're just using it for rewards to buy things like plane tickets, or you're going to trade them in to cover something you're buying on Amazon, things like that, then you don't have to worry about it. But there is the difference, and it's right around, I think it's around 2 to 3% that you can get benefit back on rewards. And there's people out there that game that system too to get even more, and they're trying to get even more benefit. Yeah, okay. And again, I'm going to channel my inner Dave Ramsey and say, you better pay that sucker off every month. Okay. And then he's going to say, a lot of people don't. And I'm going to say, yeah, you're probably going to have a little bit of interest, but the benefits generally are going to outweigh that little bit, even if you make a mistake. And besides, rewards are fun. Like we feel like we're getting something. It's like a Christmas present. So yeah, you get to use these things. I would use them for free flights, vacations, things like that. So you never have to worry about whether there's a taxable situation. Number 4, and I've run across this, when you buy things on a credit card, you can have purchase protections plus extended warranties. Make sure I spelled that. I got another R in there. Warranties. All right. So I could have added warranties under the credit card. So if I have like my American Express, I might get a certain type of liability protection on a rental car. Maybe it's going to give me automatic collision or something like that, or maybe it's going to cover the car if I screw it up. It might be secondary, but there are protections, or it may cover a purchase in case it gets broken, stolen, or something like that. There are protections that come with certain credit cards. That is going to be a huge difference between the credit card versus if you bought it in a debit card, where you bought it in the debit card, you're on your own. You just pay for things with cash, you're done, right? You want to buy it with the credit card, then quite often Visa, MasterCard, or American Express is going to give you a benefit by having certain protections that they will give on certain items that you purchase, even with certain retailers, right? There's always going to be these little things that they do that are of benefit to you, trying to get you as a consumer to buy using that credit card again. Because remember, why are the credit cards doing this? It's not just you, right? They're getting paid by the merchants. So if you're using your American Express all the time with merchants, they're making, 2-3% on every transaction. And if they're giving you some rewards and some other benefits, that's great. They've built it all into the calculus. They make a bunch of money. They make interest on the balance you carry. They do all these different things that they make money on, so long as you use your credit card. So they're going to give you lots of incentives to use that credit card. Now, none more attractive than number 5. Number 5, depending on what type of business you have, or whether you just, as an individual, maybe you're not the best at your budgeting, then you have grace periods. Pay that sucker off every week or every month before it's due. Heck, if you just pay it off every time you make a transaction, hey, once a week, you'll never pay interest. You're getting free money. Every 30 days, I'm getting free money. I'm not paying interest so long as I pay within it. It's usually you have about 30 days. So I got 30 days, same as cash. What do I get the benefit? I got to use that money from somebody else. I didn't have to use my cash. My cash could be in a savings account making me interest. My cash could be in stocks making me dividends, or option income, or other investments, or maybe so I don't have late fees, or I don't have to pay interest on other things. It might be saving me money because I have a grace period to pay it off. Usually, again, it's about 30 days. What is that worth to you? It depends on your scenario. If you were looking at something where like, hey, if I use my debit card, I couldn't pay my rent in full. Because I didn't pay my rent in full, I had a $50 late plus, X percent or whatever, right? Maybe I have a $50 late fee. But by using my credit card, it allowed me to avoid that late fee because now I could use my cash to pay my rent. And then I pay my credit card off within the grace period, and I never had to pay it. It saved me $50. You can do that with a credit card. You cannot do that with a debit card. So there, we dove into 5 things. Hopefully this makes sense to you as to why you'd use a credit card other than versus a debit card. If you like this type of information, please like and subscribe. And if you have any comments, if I missed something or you have a contention, put it down in the comments. And if you know anybody who would benefit from this information, please forward it to them, and I'll see you later.